part of the leadership team at Advisian, and I put a little deck here together, just a few slides saying, sort of addressing the questions, what are the health outcomes and what could they be? How can we manage the risk? How can we all be safe? Clearly, the top priority is making sure that our employees, and in fact, all stakeholders, whether they're ours, our clients, or the public's, are protected. The open question is, you kind of heard, is when will this all resolve? Is it a month from now? And then, absent of the short term, keeping the wheels on, so to speak, what are the effects on our clients and the market? And how does that affect how we do business here in the short term and moving forward? The only thing I think that's certain here is the lack of certainty in all of those areas. So it's really a risk management effort and evaluating different potential outcomes and how they have effects. You go to the next slide. You all have seen this slide on the news, and I'm not going to go through all the nuts and bolts of trying to analyze the crisis, but the key healthcare objective and policy objective is to flatten the curve and get the cases spread out over time so that our systems can respond to that. And there are some things that are overdriving everything for us. One is the hydrocarbon issues, and I put the first line of this at Dow below 25,000, oil below 35. If I'd written it today, obviously it'd be Dow below 20,000 and oil below 30. Hydrocarbons being a large part of our business is what differentiating the effects between the short-term Saudi-Russian price war effects and the long-term outlook if economic situation turns and stays bad in the longer term, and I'll address that a little bit later when talking about client sectors. Cash flow is obviously an immediate concern, and we've been looking at our billables and trying to manage our outstanding invoices. Third is, as I mentioned before, is the real health effects. We have a change, or seeing a change, significant change in spending patterns by our clients as well as their customers. And that's shaking out, as you all know, from day to day. One of the conclusions that we drew was that the resources available to companies like a lot of ours are being reallocated from investment in major capital investment, and those, I think, being, as Andrew said, moved to the right on the chart. Nothing so far that we've seen has been canceled, but they're adopting a wait and see position with regard to large capital expenditures, with the caveat that there's a lot of things in the work, and it makes financial cash management sense to continue those at some level, but maybe at a decreased level, versus the continued need for operating expenditures. And in the context of a lot of us on the call, that means compliance activities, reporting activities, remediation of facilities that are under mandate to be remediated. So a lot of things that are not associated with new greenfield projects. So that was one of the economic takeaways that we've had over this week. Then I mentioned cash in terms of our own business. A lot of the clients seem to have cash issues, and that could affect buying consulting services. It could affect the immediate middle term existence of some of our clients. In watching the larger market conditions over the last week, with some of the screwy things going on with bond prices related to stock prices and general liquidity, is people are dumping every asset they seem at certain times of the week, and it makes you wonder whether there actually really is a cash shortage that is real, and there could be. And that maybe is the fallout of a lot of share buyback that's taken place over the last few years, or meeting debt obligations. I think it's a multiple of factors, but I think the takeaway from that is that our customers may become cash strapped that could last for a while. Going to the next slide, we tried to look at some of our client sectors and what the outlook might be. And this is pretty far crystal balling. And I think you all have probably done exactly the same thing in the sectors that you're working on. So I'll kind of go through it. And the oil industry, I think we've talked about what the oil prices are, the difference between capital expenditures and operating. And I guess the third point I'd make on that is differentiating clients and their outcomes. As you know, the energy market is not a monolith. It's a lot of different players with a lot of different operational approaches, a lot of different market conditions. Clearly, our unconventional gas clients in the various bases in the Permian and so forth are facing a different set of challenges than Shell and Chevron and Exxon are. So we're trying to differentiate that and look at what our responses are. We do a lot of work in the chemicals industry, and I was glad to hear Andrew pointing out, and we probably need to think about it further, that cheap energy has spin-off positive benefits for some of this group's client sectors. So there is a little bit of an upside on energy prices being lower for some parts of our market. Transportation, that sector, there's a lot of ups and downs and unknowns. I think there's going to be different kinds of facilities that are going to require investment, different kinds of port and airport security that could require capital investment. There will be perhaps things that are not in our traditional kinds of projects that will come up in the transportation sector that provide opportunities for us. And I'm not sure what that is, but construction related to health security, similar to what there's been for terrorism kinds of security. So I think there's a lot of opportunities, but there's downsides also. If any of us are working for the airlines themselves, they're strapped. They've been, in many cases, buying back stock and investing obtaining a lot of debt to invest in new airplanes. So the airlines might be challenged, and that client sector is probably problematic. We could see a potentially significant shift in the cruise industry if it gets a permanent black eye from all this. And the pestilent ship was the headline on one of the articles the other day. That, along with sort of the unfavorable environmental footprint that cruise ships are alleged to have, could affect that industry, which would then affect port clients and the drive towards port power and infrastructure to support ships. So that could be a negative area as well. Renewables, one of the things that came up in one of our conversations is the health crisis is not an environmental crisis, but although Andrews, I think in his closing remarks said, are the two connected? Could the mentality towards the green economy, could that be ramped up further by adding it to a healthy economy as well? I don't have any idea what that would mean, but that is something we need to think about. The clean power plan kinds of things, not necessarily the plan itself, and renewable development. If the sense of community and country comes together to include that more, it could help that industry sector further. On the other side is if recessions are deep and long or worse, Could there be a fall back towards whatever's cheapest and easiest, and cranking up or further cranking up of our coal-fired or oil-fired power? Could we fall back into dirtier ways, and that could affect this sector maybe negatively? I think one of the outcomes of all of this when the dust settles is that infrastructure stability is a key to further economic progress, and that means in this particular instance healthcare infrastructure, but I think people are going to connect the dots to power infrastructure stability. Will the lights turn on? Water infrastructure stability. Will the taps turn on, and do we have the water that we need? And energy infrastructure. So that could help provide opportunities for our industry.